Well, the market is struggling to get in the St. Patty's Day spirit. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are flat today, swinging between red and green as the market turns its focus back to the war in Ukraine. Russia denied a Financial Times report from Wednesday, which claimed the two sides had made, quote, substantial progress in peace talks. Kremlin spokesman Dmitry Peskov saying today, quote, on the whole, that's wrong. When there's progress, we'll tell you. Now, the two sides are set to meet again today. And new concerns about a supply shortage are pushing oil prices up again. West Texas Intermediate crude futures are up more than 7%, topping $102 per barrel. Meantime, Brent crude futures are also rising more than 7% and nearing $106 per barrel. Now, both did tumble below $100 earlier this week, but the International Energy Agency said it's expecting a loss of 3 million barrels per day of Russian oil and products next month. Now, that sharply outweighs the expected demand drop of just 600,000 barrels per day. And it was another chaotic day of nickel trading on the London Metal Exchange. Now, the exchange placed an 8% up or down limit on the metal today after a glitch violated the 5% limit, which was set on Wednesday. The 3-month contract did hit limit down right at the open, falling to $41,945 per metric ton. Now, nickel trading was originally halted last week as prices more than doubled and topped $100,000 per metric ton for the first time ever. Now, on top of Ukraine, the market is still digesting the Fed's message from Wednesday. The central bank hiked interest rates by 0.25% as expected, but Wall Street is focused on the future. The Fed did pencil in 6 more rate hikes this year, 1 at every meeting left, 3 in 2023, and then none in 2024. Fed Chair Jerome Powell also told reporters the bank will likely begin the reduction of its balance sheet at their next meeting in May. Now, the Fed also hiked its inflation forecast for the year. The Fed now sees PCE inflation remaining at 4.3% by the end of 2022 versus their previous expectations for a decrease to 2.6%. Now, that's then expected to fall to 2.7% by the end of 2023 and then 2.3% in 2024. The bank also slashed its economic forecast for the U.S. economy this year, now expecting GDP expansion of just 2.8%. Their previous forecast was 4%. Now let's take a look at the economic data of the day today. Weekly jobless claims fell to the lowest level since the beginning of the year. Labor Department reporting 214,000 Americans filed first-time claims for unemployment benefits last week. That was down 15,000 from the previous week and better than expectations for 215,000. It's also the lowest total since January 1st and shows the economy nearing full employment. Continuing claims, meantime, fell by 7,000 to 1.42 million in the week ending March 5th, beating expectations for 1.48 million. Now, U.S. home construction rose more than expected last month. The Census Bureau reporting today that housing starts jumped 6.8% to a seasonally adjusted annual rate of 1.77 million units in February. That's the fastest pace of home building since 2006 and was better than economist expectations. Single-family starts jumped 5.7%, while multifamily starts rose just 0.8%. Now, building permits for future projects did fall 1.9% to a seasonally adjusted annual rate of 1.86 million units, but that was better than the expected drop. Home builders have seen a surge of increased demand as buyers face a severe shortage of existing homes for sale. Now, that shortage has pushed prices to record highs, and rising mortgage rates are piling on top. Freddie Mac's average 30-year mortgage rate has now topped 4% for the first time since 2019. That rate jumped 31 basis points to 4.16% over the past week. It's the highest rate since April of 2019. Freddie Mac's average 15-year rate also rose 30 basis points to 3.39%. But rates are expected to remain volatile in the upcoming weeks as mortgage rates do closely track movement in Treasury yields. Now, those yields did originally spike on the Fed decision Wednesday, but have since cooled. The yield on the 10-year Treasury note is down about 4 basis points today to 2.16%. And to wrap things up, Berkshire Hathaway's massive stock is extending a record-breaking rally. Class A shares of the Warren Buffett conglomerate are up more than 1% today, pushing above $509,000 per share. The stock surpassed $500,000 for the first time ever on Wednesday. Now, this rally comes as Buffett has increased his investment in the energy sector as energy prices have soared amid the war in Ukraine. Berkshire Hathaway buying another $1 billion worth of Occidental Petroleum shares today, bringing its total stake in the company to $7 billion. And Occidental shares are rallying more than 8% in today's session following that increased investment. Now, looking ahead, we'll get the latest data on the existing home market tomorrow morning, with the sales set to be reported by the National Association of Realtors at 10 a.m. Eastern. So be sure you don't miss the Wall Report at noon Eastern to get all the details. I'll see you then. Be sure to hit that subscribe button and the notifications bell before you go.